All right. So okay. So from what we see here now is that we can see how that this guy reacted on the 50% of this week. So now this whole thing is that I don't want to bore you with all these things like key levels here and there, but at least you know what the key level is. You know that you can also watch out for 50% of the week. So for the next class, which we're going to do fully from next week, let me just go into full pictorial, whatever. Let me go into something full, something like to show us what these things like the application of all these things. All right. Now, what is the application of this? Let's say we were here right now. Okay. So I'm trying to avoid analysis. I want to keep this section very simple. So let's say we're here right now. I know that this is a key level. Okay. And this is a weekly time frame. Look at my screen. The weekly time frame. Um, oh, what a mistake. Oh, Lord. All right. So yes. Can you see my screen? All right. I believe you can see my screen. So now I know that this is a level. Okay. So if I play this, what I'm expecting is that I want to see if this price is going to shoot downwards. Okay. I'm also seeing here as a level as well. But you know the thing right now is this, I'm trying to avoid analysis. I want to make it very simple. Now, if you look at this candle we're seeing here, at this point, this is a fresh level because you can see how the candle body has closed it. Even though it's not really a fresh level, if you feel like it's not a fresh level, if you feel like it's not a fresh level, you don't want to stress yourself. Okay. Just know that this is a level. Because if you look at the line chart, you can see that it's a level to the left. So I will be expecting price to react from here, which we see how the price did. Now, I want you to understand that when you see a reaction on a level, before you take any execution or any reasonable action, try to be patient enough to allow the candle to close. Because this candle is still forming right now. It might close above this level and fire upwards. You don't know. So once the level close, then the next thing is to go down to a lower time frame. That's how we make use of these key levels. Now, so right now at this point, I'm seeing this level as a key level for myself here. This is a key level, okay, and this is a key level. Right now, this key level, I cannot say if it's not fresh or not until I see this candle closing, because this candle might close above this level and still retain this as fresh. But if the candle close below this level with a wick on it, then it becomes unfresh. Okay. So and it means that I might have to go down to a lower time frame to go and see what's happening on the lower time frame to see if there's a break of structure or a reversal to the downward side. And because this is a weekly time frame, I can go to a time frame lower, like daily time frame on that level there. You can see it there. So to make it easier for you on that level there, just put a line where it is. Okay. This is what I'm doing. I will come back to this level. This one up, I'm coming back to it, but let me delete it so that to make the chart very easy for you. Then you can just put a little box there so that you won't be too lost on the charts when you go down to a lower time frame. It's not like the box controls the charts, it's just to make your graphic easier to locate. So if I go to the time frame, I'm right there right now. And where did the reaction come from? With more detail, we can see that the exact point was here. Do you see? So until I see a reversal until I see a reversal in the market structure around here, that's where I'm okay. I want to go downwards. But right now, I'm not seeing any reversal to the downward side. So I don't want to go too into details like that. Next week we'll go into that one. But let us see how this skill. Let us see the importance and the application of this skill level. Then let me go back to my weekly time frame. Okay. If I continue the chart, let's see what's going to happen. Okay, now we can see that this candle has completed formation and a new candle is forming. This new candle is forming, right? This one has completed formation. So this is clearly a rejection. So this is where you go down to your lower time frame to go and check for things here as regarding either a continuation or a reversal. Okay, I can't go down lower to a forward time frame because this is on replay. So let's continue this replay. Let's see what happens. Now remember I told you that there's a level here as well. So I'll put my attention here now. This also is a level, mind you. This guy also is a level here. See this guy here, in between this candle, this black one and two. You might know that those gap also levels. They also key levels there. This guy tapped into it, but it doesn't look like it's rejecting to the downward side. This guy is still penetrating it. But me, I like to take my reversal entries from these levels here. You see this apex that look like an A. I like to look for reversals there. Then this one that look like a V downwards here. Mhm. I also like to look for reversals there. So the one on the gap, I hardly work with it as a place to find reversal. It doesn't mean you cannot find reversal there, but for me personally, I love to take this A and this V down here. Do you understand? So let me continue the trade. Now, see what's happening. The candle is still forming. It's still forming. It's not now. It's still forming. Now it is done forming. So at the point where this candle stopped forming, it is now a rejection. But when it's still forming, you cannot call it a rejection yet. But now that it's done forming, it's a rejection. So at that point where it was forming, let me try and end this replay and redo it again. I want to make it as realistic as possible. Okay, so let me take it again. So at this point, when you see this guy tapping it and you're seeing his rejection, maybe at that point in time, maybe the rejection is not done yet. You want to just take your line, put it there, because the candle is still forming, okay? And the rejection is not concluded yet. It is an it is a rejection in progress, but not casted on stone yet. So at that point, just put your line there. You're anticipating and probably hoping that, oh, it might just be a rejection. And if it's a rejection, fine, I think was what the market is giving me. So what do we do there is that you go down to a lower time frame. Okay. Remember, just to make the graphic easier for you to flow with, put a box here. On lower time frame, you can see it there. Where did that rejection actually tap from? Not here. Shift. It is this place here. That was where the touch came from. We adjust that line. So inside that place, you can decide to go down to, let's say, if a lower time frame to get more details. Now, what we're actually trying to do is that in this rejection, we want something that would signify to us that the market has reversed. There's a break of structure to the downward side. You might want to call it chalk for those guys in SCM, what do you call it? SMC, or the guys in ICT, we want to call it MSS, market structure shifts. Or just to make it simple for you to understand, just call it one word, break of structure. What kind of break of structure? A market reversal break of structure. Do you understand? So that's how these things are applied. That's how these things work. Going back to the time frame. Okay, so yeah, on that debate time frame, yeah. So okay, I think next week we'll do the like the class proper on executing trades, right? So for now, we're just looking at the application of these key levels. Okay. So if you have any question you want to ask, you can just put in the comments section. Let me just check the chat box. Still moving downwards. Look at this guy now. I'm expecting this guy to come down here. Okay, you can see that this guy came from here. So I have to just what put my line there and probably go down to a lower time frame. And where did rejection start from? Exactly at this point. And I move it here. So inside this place, I want to look for what? A what? A what? A a market structure or what? Sorry. Inside that place, I want to look for what? A break or structure rather. A break or structure that either tells me that the market is going to continue downwards or reverse. So this is how we make use of these key levels. Now, to make this thing quite, I've not spoken about liquidity yet. I think the reason is because myself personally, I don't pay attention to liquidity. Like when I mean I don't pay attention, it's more like I don't disturb myself about it. Like it's there. And that's why I like the Malaysian scenario. Like it's there. But the Malaysian scenario helps in such a way that the psychology of Malaysian scenario is such that when you are trading, it helps you stay safe from the liquidity. But if you are now conscious of liquidity, it makes your trading much sweeter and much safer. So imagine now that you are just a guy who have never had about liquidity before. All right. And you are seeing a level here. You just seeing this level here. All you just have in your mind was that okay, I just want price to just come. I'm not waiting for price to probably come down here. For the guy as a SMC guy or let's say ICT guy, you see this, like I told you, I don't want to go into more details. Just see this little guy here. See this little guy here. Lord, my mouse. You can see this guy here that did not touch the line. That week that stopped halfway. Remember, I told you that last time. I told you how that when you have something like this, price is supposed to come down this way, right? Come down this way, right? But imagine that price just came this way and stopped halfway and did not come down here. Remember, I told you that it's going to what? Come down here and move up. I explained how that this guy here becomes what? A liquidity. I explained that thing in previous class, like when I said things like medicated and unmedicated zone. Now you see this guy here. This guy was supposed to tap into this level, but he did not tap into that level. So he became what you can call what like liquidity. I don't know if that's the best way I can explain this to you. And definitely price has what come down there at the end of the day. You can see that. You can see that where this guy failed to accomplish his mission, this guy ought to have come down to balance this level. But he failed to accomplish his mission. And this guy fulfilled the task of mitigating that level down there. And if you go down to the daily level, you can see how that it becomes more vivid. That this is actually like a liquidity trap. I don't like using those words, but hopefully you get the whole gist. So, all right. Okay, good. You get it. Great. So, what else again is that? So yeah, for the Malaysian external guy, the guy might know that this is liquidity. He's just looking at this level and that's all. And that's all. Now, let me explain something. So I'm looking at the point of these key levels, right? So what if we were somewhere here and you do this level here? Look at this level one. This level, right? This is a level, and this is also a what? A level. So you'll be like, which one would I take? Now, when you have levels like that, like you have multiple levels on your charts that you're looking at, let's say one, two, three. What you can do is that you can always go to a higher time frame, like the free time frame here. And what do we see here? We see how that this guy You see that this guy here now, this is resting on the weekly level. This second guy is just hanging on the week of the candle. Let me replay this for you so you get what I'm saying. So on the daily time frame, this is where we are right now. Okay. So we are looking at two key levels, right? This is one, this is two. Isn't that right? Now you like which of them will I work with? And let's say you have price moving up. Now you might be looking at picking this guy for a long ride. This guy here. But to make but when you have like let's say one, two, three levels, what you can actually do is that sometimes you can go to a higher time frame. Let's see what's gonna happen. Did it react from there? Okay. Pause that thing, guy. Okay, so I didn't see any. Okay, it reacted from there at first, but it still what dipped down to the lower level. So for someone who may have actually checked the weekly time frame, you will see how that this lower time frame was actually resting. This lower key level was actually resting on the support level from the weekly time frame. So I would want to use this one and not this one that's hanging on the week. For instance, if you got this, please could you just give me a response on the chat box? You get that? You can just give me a response on the chat box. So I don't know if you got that. Peter, I don't know if you got that. How that's I was explaining how that if you have like let's say one or two or three levels on your charts, I want to filter it out. You can go to a higher time frame and so I don't know if you got that. So if you have let's say one or two or three levels and want to filter it, you can go to a higher time frame to see the one that rests on a higher time frame key level. Okay, so the power time frame, right? The power time frame. So if you look at this guy here now, this is a level here. This is a level here. This is also a level here. So you may ask me which of them should I take? You might want to go to a daily time frame. And on the daily time frame, what do we see here? We can see that the second one, the third one is just on the week. So I might not prioritize it. The second one too is just on the week. I might not really prioritize it. And we find the last one just at the resistance level on the daily. So I will most likely prioritize that. You can see how that when price came down here, pull down, and gave me massive pull down. So I'm always looking for the best quality setups, something that is of quality, something that can take for a long ride. Now, at this point where the team reacted from, let's go down to the lower time frame, like let's say the 4 hour time frame. So inside that place, you want to look for a reversal signature inside this place. So penny to when next we have our next class, you can check the previous videos we've had so far on the channel. Then that's you can watch this one. So I think the episode, I think this one here. I think this one, this part two and this part three and this part four. Okay, so yeah. Before we end this class, any questions? Could be Peter, you can just write in the comment section. Okay. Peter, no questions from Peter. Could be, can you hear me? Any questions? Okay. So if there are no questions, I believe it's clear then. So so the next thing now is what we want to learn is execution. So it's that simple. So this is just very simple and very beautiful, like no stress in trading, very fantastic. Yeah, well, so I think we can end the class here so I can attend to other things over here. So in the next class, we'll look at things like the entry. Let me see. Someone send me the chat. Okay, so let me see. Let me see. I don't know if I explained candle break. So let me see if I can use a minute to explain candle break. Now, for a candle break, hmm, a candle break is when you have something like, when you have something like this. Did you see this? Let me explain what I want to explain what the candle break is. So if you have a candle, for example, let's say you have a candle like this, and this is the top of the candle. This is the bottom of the candle. All right. And a new candle closes above this top of the candle. That's a candle break. That's a candle break. All right. Um, I don't know how best to apply this right now for you, but let me just pass it across to you. Okay. I have a friend that uses that kind of strategy. So why some people are waiting for a break of structure? This my friend. Once this guy spots a candle break, he takes his trade already. Okay, so let me just show you what it looks like. So for the candle break, now look at this level. This is a key level. Can you see that? That's a key level. However, the price did not really react from there. So can I use that one? Don't know. I need something. But let's just say, imagine that this guy was reacting from here. Just imagine that this guy actually reacted from here. Let's just assume. What you want to do is that you want to see this candle. You want to see the top of this candle close above. The moment this candle closed above it, that's a candle break. Straight up. What about this level here? Let me show, look at this guy. This is a level here. The same thing that I was expecting down here that didn't work out. I got another opportunity. So this is also a level. You can see how price came down to it, dipped into it. And when price dipped into it, what do you want to do here? Is that the next candle, you want to see the next candle closing above this yellow one where my hand is pointing to. And the price break above it, price broke above it here. So some call that candle break. Okay. But for me, a break of structure would have been at this left side here. So I don't want to go into too much analysis right now. Okay. So let's just stay where we are right now. So if you want more bulk of the moment, you can go to the YouTube page and check those other resources, like one I showed you part 2, 3, 4. So the whole point of doing this was just to like show us how key level works and the importance of key levels. Should I use an asset? I will check for a stock market. Let's check for a stock market. So let's look at Tesla. We're running out of time. But let's look at Oracle. Oh, crazy. This is what it looks like. Mhm. So if you're having this whole thing, this kind of a thing, there is there is this there is this indicator I use, no candle gaps by who? No candle gaps by a cutter. Just come here to indicators, no candle gap by a chip pattern. So when you turn it on, you get the candles, then you have there's a way I configure this thing to show candles. I've forgotten how I did it, but I think I'll have to explain it later. So right now, okay, this is blinding me. Let me turn it off and use this. So if you don't use that candle whatever by each pattern, there's another form of candle. It's called Elkin. I think Elkin Ashi. I don't know how that's pronounced, but that's the name. This is it here. Where is it? This is it here. So it can help you solve that issue of you finding unnecessary gaps. Now, if I switch my line charts as well, my line charts too is just very easy to go. So I don't have issue of those gaps. Now, I'm trying to see if we can apply that on this stock market here. So this is a daily time frame, and we can see how this is a key level. So let me see if it's going to work. Like I told you, different markets has their way of behaving. So on the candle charts, is there a wick down there? We don't see price coming down here. It just went all the way up. What about this level? I don't see price coming down there. So in this case now, in this case, I might have to, let's say, go down. What about this place? Look at this guy here. That's a level there. That's a level there. So I might that's a level there we're saying. Inside this place, you want to go down to a lower time frame. Okay, your line there. Then let's see if you can find a break or structure around this place that will signify to you that this is a lower time frame right now. This is a one time frame. Okay. So inside this place, you want to look for a break or structure that will take you to the upside. Now I want to go down to the 15 minutes time frame and see what's like. So imagine that you're able to spot this. So you are just taking this top trade. Now look at this place here now. You can see that on lower time frame, you can see a key level here. Or if you want to use your line charts, this is a key level, right? Hold it, just hold it there. That's a key level. Can you see? Already like this now, if you are getting the flow of the whole thing, by now, you observe that you're already learning how to take trades, entry trades already, even just by explaining just how key level work and the application of it. Now, this is a 15 minute time frame, and you can see how the price broke above this level. That's resistance level we're seeing here. How price broke above it and came back. Because it's a line chart, you might not see the wick. So if you look at your candle charts, you can see how that price taps it, or you want to go for use the sinking. I don't know if I'm pronouncing that correctly. You can see how price taps it. So you can see the application of this thing. So someone can also actually enter from here and fly all the way up. This is a stock trade, a stock market, and move all the way up. And you can see how this guy delivered crazily. That is fantastic. What would it be like if you kept a trade there? Let me see something. Okay. I want to see if I could get. I want to see the monetary value of this whole thing. Okay. I'm trying to see if what to feel like if I taking a trade there. Let me use the lowest. the lowest value quantity, right? So let's say I put a stop loss around here. So around here, for example, that is minus $3. Okay. Then what about I want to see the value of that height it went to. Wow, that was a massive wow, that was a really massive. So that was like $119 profit for that distance. That's really incredible. So I don't know if you are seeing the application of this. If you are getting this, you can just leave a comment for me in the box. We have 4 minutes before the class ends. So I'm not really teaching entry right now, but I'm just showing like the application of these things, how these key levels are very, very helpful. Okay, Toby, you got that. Okay, Peter, you're getting that. So that is very lovely. That's great. Uh, okay, so yeah, so yeah, we can end the class here now. So yeah, we can end the class here. So the next class, we look at entries like this. And if you have any question before then, you can always ask the question. And I'm sure that if you go and watch the channel now, actually, something will make more sense to you now. Something will make more sense to you. Right. So, all right, let me stop here. So let me end the recording.